All right, let's jump right in. We're going to talk about something super important today, the 7 money habits that are keeping a lot of Americans poor.
There's this one idea that really gets to the heart of the whole thing. It goes like this. Most Americans don't fail because they earn less. They fail because of habits they repeat every single day. So what does that really mean? It's not about how much you make. It's about what you do with what you make every single day. And that idea leads us straight into this huge, kind of confusing concept, the gap between your income and your actual wealth. I mean, you know the story, right? You get a good job, you're making decent money, but you still feel like you're just barely getting by. So why doesn't a good paycheck automatically make you wealthy? Let's break down the habits that cause this exact problem.
Okay, so where's the starting line for all this? Well, it really comes down to one fundamental mistake, the one that kind of sets the stage for everything else, and that's spending before you save. This right here shows the 2 roads you can take perfectly. Over on one side, you've got the path most people take. You get paid, you spend on bills, rent, coffee, whatever, and then you try to save what's left. And let's be honest, what's usually left? Not much. But look at the other path, the wealth path. It flips the script completely. You get paid, and the very first thing you do is save. You pay your future self first. Then you spend what's left over. That simple switch, it's called paying yourself first. And believe me, it is an absolute game changer. So when you don't save first, it's not just a small oops. It usually snowballs into much bigger problems. Let's talk about 3 really common debt traps. And these aren't just little slip-ups. We're talking about habits that actively dig you into a financial hole that can feel impossible to climb out of. Okay, the first trap is super sneaky, mostly because it feels kind of good at first. It's called lifestyle inflation. So what is it? It's when your spending just naturally goes up every time you get more money. You get a raise, and what's the first thought? Sweet, now I can afford that newer car. Or finally, I can get a bigger apartment. And that's where the problem starts. You end up on what's basically a financial treadmill. Yeah, your lifestyle gets better, but your bank balance, it's stuck in the same place. That pay raise that was supposed to be a step forward just gets gobbled up by a bigger car payment or higher rent. So you're earning more, working harder, but you're not actually getting anywhere. All right, debt trap number 2 is everywhere, credit card dependence. And look, we're not talking about using a card smartly to get points and then paying it off right away. No, this is when you start relying on that credit card for everyday stuff. Gas, groceries, your morning coffee. And then, this is the critical part, you only make the minimum payment each month. And that minimum payment, that's the trap. It feels so small, so manageable. But with those crazy high interest rates on credit cards, that small purchase can take you years, sometimes even decades, to actually pay off. You end up paying what, 2-3 times the original price for something you bought ages ago, all while that interest is just compounding against you. And that brings us to the third trap, which is basically living without a financial safety net. It's having no emergency fund. This means you don't have that dedicated stash of cash, usually 3 to 6 months of living expenses, set aside for when life decides to, well, happen. And this is exactly why it's so dangerous. Your whole financial world is like a house of cards. All it takes is one thing, one unexpected medical bill, one major car repair, and the whole thing comes crashing down. Without that emergency fund, that little surprise instantly becomes a big debt, and it pushes you right back into the traps we've just been talking about. It's a vicious cycle. Okay, so we've talked about the active debt traps. Now let's shift gears to something a little more subtle. Let's call these the 3 big financial blind spots. These are the problems that creep up on you because you're just not paying attention, and what you can't see can definitely hurt your wallet. The first blind spot, it's just straight up ignoring your credit score. And I get it, it's easy to do. It just feels like some random 3-digit number, right? But in reality, that number has a massive amount of power over your financial life. Just think about everything this one little number controls. It can literally be the deciding factor on whether you get approved to rent an apartment. It sets the interest rate you'll pay on a car loan or a mortgage, which can cost you thousands and thousands of dollars extra over time. It can even impact your insurance premiums and, believe it or not, what some employers see on a background check. You just can't afford to ignore it if you want to be in control. All right, the next blind spot is a big one, not having a budget. This is really just spending your money without any kind of plan. You know your paycheck comes in, and you definitely know it goes out, but you don't really have a system for telling it where to go in between. There's this quote that just nails it. If you don't track your money controls you. And that's so true.
A lot of people think a budget is about restriction, like putting your money in jail. But it's actually the complete opposite. It's about power. A budget is the tool that lets you be the boss of your money instead of getting to the end of the month and wondering, wait, where did it all go?
And our final blind spot. This one is less of a specific action and more of a mindset that kind of fuels all the other bad habits. It's short-term thinking. You know exactly what I'm talking about. It's that human instinct to pick what feels good right now, even if it's not the best for us in the long run. Yeah, it really just boils down to a simple trade-off. A little pleasure today for a lot of stress tomorrow. That impulse buy, that extra dinner out you hadn't planned for, sure, they feel good in the moment. But when it becomes a pattern, when you're making those choices over and over without a bigger plan, that's what builds up all that long-term financial stress and anxiety. So, okay, we've gone through all the habits that hold people back. So what's the solution? How do we move forward? It's all about building wealth deliberately. And here's the most important thing to remember. Financial security isn't about luck. It's not a lottery ticket. It is all about the choices you make on purpose, day after day. And the path forward? It's pretty straightforward, actually. It's basically doing the exact opposite of everything we just talked about. First, you pay yourself first. Then you make a conscious effort to control that lifestyle inflation. You start using credit as a smart tool, not a crutch to lean on. You build that emergency fund so you have a safety net. You get to know your credit score, and you create a budget you can actually stick to. See? Each one of these is a choice, a deliberate action you can take. And that really brings us full circle, right back to where we started. The big takeaway here is this: wealth isn't about getting lucky. It's not about some big break. It's just about the simple, consistent habits you practice every single day. Hey, if this breakdown helped clear things up for you and you want more stuff like this, think about subscribing so you don't miss our next explainer. Thanks so much for watching.